If you think this game is about patterns and indicators, you've already lost. The market is not a puzzle. It is a mirror reflecting the man you truly are. I want you to look at your trading losses. How many were caused by faulty analysis, and how many by fear and greed? The brutal truth is the latter. Jesse Livermore, the boy plunger, learned this. Through four bankruptcies and eventual colossal wealth, he realized that success wasn't about a secret technical indicator, but about mastering a system within a precise psychological operating system. This is the 10 phases of a successful trade. Livermore's complete system. This system is your blueprint for achieving the cold, machine-like execution that separates masters from amateurs. It's about becoming a speculator waiting for certainty, not a trader seeking action. We begin with the first essential victory, the separation of observation from action. We must now tackle the biggest internal enemy, the urge to constantly trade. The greatest lie the market tells you is that you must be busy to be successful. Inactivity is the highest form of discipline. This is phase 2, confinement of capital. The core conflict is the paradox of action. We feel compelled to act, but Livermore proved that 90% of market activity is just noise. His genius was his ability to sit still, sometimes for months, conserving his financial and psychological capital. The big money is not made in the buying and selling. It is made in the waiting. If a potential trade doesn't meet all your predefined criteria, you must treat it as non-existent. The conflict is boredom and FOMO. Livermore's antidote. Stay out unless the direction is so clear it screams at you. You must prioritize long-term capital preservation over the short-term dopamine rush of a low-probability trade. This patience is crucial, but it leads us directly to the trap that destroys accounts, the ego. The fear of being wrong is the most expensive emotion you will ever possess. It turns tiny mistakes into catastrophes. Phase 3 is the ego trap. When the market moves against your trade, the ego refuses to admit the mistake, whispering, "Just hold it. It will come back." This leads to the ultimate sin, averaging down on a loser. Livermore realized the market does not care about his opinion. Price is the only truth. The moment the price breaches your predefined stop loss, your opinion is financially incorrect. The psychological breakthrough is seeing a small, quick loss as a successful execution of your risk management plan, not a failure. Hope in a losing trade is a liability. You must achieve absolute detachment and execute your stop loss instantly to protect yourself from your own ego. How do we defeat this ego? By adopting Livermore's objective, market-driven perspective. I stopped trying to predict the market and started simply observing its movements. That switch was the moment I became truly rich. Phase 4 is seeking confirmation. Livermore stopped trying to predict and focused solely on price, action, and volume. His tape. He sought to trade with the line of least resistance. If a stock was trending up, he aligned with it. He was content to miss the first 10% of a move, waiting for the definitive breakout that signaled the smart money was committed. He was waiting for the market to validate his hypothesis, not the other way around. His famous quote, "It was always my sitting." The sitting was the active, disciplined process of waiting for the market to speak unequivocally. For modern traders, your analysis is a hypothesis. The market's action is the only proof. Let's see how this detached observation was applied. In his greatest moment of triumph, in 1907, the world saw panic. Livermore saw a system confirming his patience. Phase 5 is the test and validation. In the bullish market of 1907, Livermore observed the key signs of weakness, but he didn't act until key stocks broke their long-term supports on heavy volume. The definitive confirmation. Phase 4. His action was a calculated initial test entry, a small, probing short position. If the market immediately rejected the test, he would take the small, cheap loss. Since the market moved in his favor, he immediately moved into aggressive scaling. He shorted the entire market collapse, making a fortune. The lesson: conviction is earned through confirmation, not belief. He proved that discipline and patience, combined with low-risk testing, lead to high-conviction execution. But even mastery can fail. We must examine the low point that forced his most ironclad rule. The greatest danger is not the moment you lose, but the moment you believe you are untouchable. Phase 6 is confronting hubris. After huge wins, Livermore would fall victim to infallibility, abandoning his rules based on gut feeling or memory. Notably in the cotton market, this hubris led him to violate Phase 3 by averaging down on losers. The emotional low point was not the loss of money, but the chilling realization of self-sabotage, the loss of self-trust. He realized he could not trust his feelings, only his rules. This crisis forced him to accept that the market does not care about past successes, and discipline must be a permanent, daily commitment, placing the system above the self. This agony forged the single most essential rule of his career. The mistake isn't losing money. The mistake is letting a loss exceed the absolute, predetermined price of tuition. Phase 7 is the unbreakable mandate. Cut losses short and let profits run. 1. The loss rule. The first loss is the cheapest. This is the non-negotiable rule. Take the small, immediate loss defined in Phase 3 the moment the market proves you wrong. This preserves capital and psychological integrity. 2. The profit rule. Patience in possession. Do not take profits early out of fear. Use a trailing stop loss to protect gains, and then sit still. Allow the big, asymmetric gains to materialize. You only liquidate when the trend shows clear, defined weakness. This dual mandate creates the essential asymmetry: small, controlled losses versus uncapped, large gains. Asterisk transition. Asterisk. How do these century-old rules survive in today's high-speed, algorithmic world? The technology has changed. The human heart has not. Livermore's rules are the only defense against algorithmic speed and digital noise. Phase 8 is the digital firewall. Modern markets amplify the psychological challenge with noise and speed. Social media, HFT, Livermore's solitude and observation are now the noise filter you must block out the digital din and trust only the price action and volume. Your modern tape. The speed of trading makes the hard stop loss. Phase 7 a survival tool. Do not hesitate on execution, as leverage will punish emotional delays instantly by focusing on longer time frames and waiting for multi-week trend confirmations. Phase 4. You sidestep the noise where algorithms dominate, ensuring your psychological edge remains intact. Understanding the rules is one thing. Implementation requires a mechanical protocol. The master trader is not a prognosticator. He is a technician. He simply executes a proven plan. Phase 9 is the execution protocol. This process removes emotional decision-making. 1. Observe. Phase 1. Identify the thesis. 2. Define risk. Phase 3. Set the hard stop and max loss. 3. Confirm. Phase 4. Set the trigger price. 4. Test. Phase 5. Enter with 25% position size. 5. Scale. Phase 7. If confirmed, scale into the remaining position, averaging up on a winner. 6. Sit still. Phase 7. Manage the profit with the trailing stop. Ignore noise. 7. Exit. Phase 7. Liquidate when the trend structurally breaks, not out of fear. 8. Review. Phase 6. Conduct. A postmortem focusing only on process adherence, not P&L outcome. This mechanical adherence ensures you commit to small, defined risks while allowing winners the freedom to achieve asymmetric returns. We now tie it all together with the ultimate realization. You leave this documentary armed not with a secret stock tip, but with a secret self-mastery. The system is complete. The victory depends only on the man who wields it. We have completed the 10 phases. Livermore taught us that trading is 10% analysis and 90% self-control. The 10 phases are your armor against ego and impulse. The freedom in trading is the freedom from emotional reactivity. When you execute this system consistently, you are no longer trading the market. You are trading your system, and your system has a proven, profitable edge. Do not seek the quick score. Seek the systematic advantage. Now that you understand all 10 phases, what is the single, absolute biggest rule you must change about your current trading habits? Write your personal commitment in the comments below. The market will try to trick you every single day. But now you know the truth. The only person who can truly break your system is you. Honor the phases, trust the process, and may your discipline always be your greatest asset. Trade systematically, and good luck.